Hi there. This episode is about reverse mortgages. I am a practicing realtor. Most of you guys would know that, or if you don't, you should. I sell houses, and I will share that my career has been over the last 25 years or so, predominantly working with 55 and older people in 55 and older communities. I love to share that my oldest client, who was a seller, was 103 at the time I sold her home. But what I find as an instructor for the senior real estate specialist designation from the National Association of Realtors, I always speak about reverse mortgages in the content anyway. But I find that there are still so many misconceptions about reverses and how they can really help someone, that I wanted to make sure that I was speaking to and asking the questions, and I call them pain points. The myths, if you will, the misconceptions, if you will, that come from the aging population and sometimes the consumer, because it's important for me to have the consumer understand this. And so I was speaking to my friend Tane Cabe, who is the president of the reverse mortgage division for Fairway Mortgage. Really good guy, smart guy, been doing this a long time. You're going to love some of the things he says, but I really wanted to make sure that all of you have a greater understanding of what a reverse mortgage can actually do for someone. So I hope you enjoyed this conversation. I certainly enjoyed, as I always do, having a conversation with the people I get to talk to. So I hope you enjoy. Well, hi, viewers. Happy to see you. Welcome to this episode. I'm very excited to introduce a friend of mine who's in an industry component. You know, real estate is my thing. This guy works in an area that I'm very familiar with, which is reverse mortgages. And I want to introduce you to my friend Tane. So Tane, would you please introduce yourself?
Yes, well, thank you so much, Jenny. So I am the president of Fairway Independent Mortgage, president of Reverse Mortgage Division, not the president of the whole thing. I've been in the mortgage industry since 1993.
Wow.
So that's been a while.
Long time.
I'm surviving still. It's crazy, like
Yeah,
you,
we're
right?
still here.
Yeah, we're still here. But since about 2004, I think was my first home equity conversion mortgage, otherwise known as reverse mortgage closing. And I got into the business because a financial advisor that I worked with at the time, I was in the mortgage business and we were referring back and forth, prompted me, said, I really think you should do these reverse mortgages, Tane. And because I have clients I could send to you that could use this. And I said to my friend still today, he's retired, Gary, I said, Gary, I don't want to sit down with a widow and take her home. That was my thought.
Oh,
And I just
wow.
thought, I have a lot of respect for you. He was my number one referral partner. And he kept pushing me. He goes, no, I don't think it is what you think it is. And I said, oh, I think it is what I think it is. And he said, no, really, I don't think it is what you think it is. Look
Wow.
into it. So I continued to look into it. And I actually read the mortgagee letters. I started to identify this program is not what I thought it was, and has improved so dramatically since 2004 when I
Yes.
started,
Yes.
that I just I'm so glad that I took his advice, his pressure to look into this, because it's changed the trajectory of my career, and it's changed so many lives that we've been able to come in contact with as a result of having people look at this program as an option for them. So anyway, that's the intro.
Thank you for that, because that was perfect. I love what you just said, because as you know, I'm an educator, I'm a trainer, I speak all over the country. I just came back from Nebraska, and last year I was in Nebraska teaching the senior real estate specialist class. And I sometimes will bring a reverse mortgage specialist in when I'm teaching, but other times I choose not to be, because I want to talk with that student body, if you will, about my personal experiences and the whys behind it, because I'm kind of a determined lady, and I want to make sure that the misconceptions are cleared up. And what you just explained is exactly what I sometimes hear. And I love, when I was in Nebraska, one of the students, after I went through the reverse mortgage section, says, wow, this could be a game changer for some people I know. I said, that's correct.
Yeah.
So let's go deeper into that specifically. You mentioned HECM. I know it's an FHA product. Is that correct? Okay.
Right, correct.
So there's insurance, and people like, what do you mean I don't have to pay a mortgage payment? So let's talk about some of that. Let's clear up some of those things, if you don't mind.
Sure. Well, the reason FHA is involved is because there's an insurance component around the program, and the insurance component is there because these loans don't require a mortgage payment. And what's the catch, right? Well, the catch is the mortgage payment that the client would have made instead is being added to the balance.
Correct.
Hence, the reverse mortgage is going in reverse. There's interest being added. So I like to use my hands. So if we had a home that's worth 400,000, we had a reverse mortgage balance of 200,000. That balance is going to go up a little bit every month, right? Instead of going down. But if we continue to go up and the house price stays the same or it goes down, eventually we could see ourselves in this situation, right? We have more owed on the house than what we can sell it for.
Right.
And if we sold the house and it was underwater, right, that difference is not going to be an obligation for the homeowner. It's going to be an obligation paid by that FHA insurance. So it's a non-recourse loan. And if anybody's done investment properties, that kind of thing, there's no recourse here. The only way that someone would lose their home to this type of program would be as if they never made their tax payments or property tax payments. Then they could be foreclosed on, but they're not required to make a mortgage payment. They only are required to continue to make their tax payments and homeowners insurance payments. So the insurance is important because honestly, that was one of the things I realized. And when I looked into these, it's well, I'm going to take a widow's home from her. Well, no, that's not the case. The widow in this case is never going to have any obligation to pay this loan back whatsoever. She could live the rest of her life in this house and never have to pay it back. And that insurance is really important. And honestly, wouldn't be involved with this program if that wasn't there.
Right.
Yeah. So.
Right. Well, the non-recourse thing, I explained that California's, I live in California, as I think you know, I live in San Diego County.
Yep.
And California created a non-recourse law issue. So we're a non-recourse state as a whole. We're deeds of trust, not mortgages. But take all of that state by state law off the table and understand when you say that to someone or the counselor says that to someone, non-recourse. I think that the challenge is, and you said it, you had the same reaction that I sometimes hear myself, that I don't want to have this person lose their home. When people don't realize that it can be a game changer, it can be a lifesaver, it can give someone the opportunity to stay in their home. And you and I have talked about this before. My own father, as an example, there was no way my dad wanted to be any other place when he passed away than in his home. We were in a position financially where it was okay. We could do what we needed to do, but that is not the case for everyone. And there's a woman I know right now. I've known her for, 30 years. She's just remarkable, sweet, sweet lady. 100 years old. Can't even imagine that. I mean, I, as I said to you before we started recording, everything hurts now at the age I currently am. I can't imagine what it would feel like at 100, but just the dearest lady in the world. She is lucky in that her physicians were able to give her 24-hour care at no cost to her. I don't know what system they're using to do that, but she's got that happening. But let's say that wasn't the case. This woman is in a chair. She can't move. She is totally incapable of moving and needs care. And you think of what could a reverse do for her? And it's very simple. This is a thing for people that I don't want to leave my home. I want to stay in my home. Well, if you want to stay in your home and you don't have that financial security, a reverse mortgage would give you the opportunity to be able to stay in your home for the rest of your life if you so desire, like you were just speaking to.
Right.
I look at it for myself when I'm at the point where I may need that. I call it when I get old and crumbly. When I'm old and crumbly, I know I have equity in my home. I have the ability to stay in my home if I desire to, because I can take a reverse mortgage and maybe look at ways I can change my own home for aging in place. It's an enormous thing. And you said another very important thing is very, very different from when it started. And I just think, I've had two different women, widows, who both did a reverse mortgage purchase. They sold a home that owned already, were able to use a reverse mortgage to buy their new home, and on fixed incomes, limited fixed incomes. And these women both ended up in a wonderful home for themselves without having a mortgage payment.
Yeah.
And therein is another point. because I'm always going back to what students have asked me over my years of teaching senior real estate specialist classes. What do you mean I don't have a mortgage payment? How does that work? So how does that work?
How does that work? On the purchase or not having a mortgage payment in general?
Not having a mortgage payment when you have a reverse, whether it's a reverse purchase.
Yeah.
You know, and this one particular, forgive me for interrupting you, but this one particular person, we did not have Fairway Mortgage doing, I wish we had. We did not have Fairway Mortgage doing her reverse mortgage for her purchase of her home. And no disparaging meant, I'm not going to mention any names or even the company, but the guy just wasn't really doing a great job for her. In fact, I had to get more involved in getting him to perform at the level I was expecting him to perform in order to help my client who's trying to buy a home, to the point where she's hitting the wall. And I'm going to share exactly what she's hitting this wall. That's it. I'm just going to do it. That's kind of her personality.
Yeah.
And I just said, stop a second. And I said, do you want a mortgage payment or not?
Right.
And she said, what do you mean? I said, remember, if you do a reverse, you buy this house, you have this beautiful home, but you don't have a monthly payment. You're on a fixed income, aren't you? She said, yes. I said, then let's just get over this guy and keep moving forward. And we did that. It was magical for her.
Yeah. Yeah. It's that whole beginning with the end in mind and having to go back to that beginning, right? You said you don't want a mortgage payment. I know this is challenging to get through right now, but remember what we talked about. You don't want a mortgage payment, right?
Right.
Yeah.
Right.
Yeah. Yeah.
Right.
No, so how it works is, again, you don't have to make a mortgage payment if you don't want to. You can if you want to, but it's not really set up to, like your regular mortgage. Instead of that payment being made, the payment's just being added to the balance on the loan. So the balance goes up over time. But if someone wants to make a payment, that will go down. Yeah.
So talk about that. So the statement, they receive a statement, and there's another component I want to speak to with respect to this. They receive a statement, and the statement shows them because what happens is interest and private mortgage insurance, PMI, is added to the balance, correct?
Yes. So there's an upfront mortgage insurance premium. That's a percentage of the value of the home or purchase price. And then there's an annual mortgage insurance premium, which is a smaller percentage, but it's because it's divided out over 12 months. So it's just a small amount that's added. So you'll see a statement that has, here's your previous month's balance, here's your interest charge, and here's your mortgage insurance charge, and here's your new balance should you decide not to make a payment. And that's, most people just get the statement and put it aside, but that's something that they can monitor and look at, and if they want, they can make a payment. There's some advantages and disadvantages to both depending on your situation. So yeah, it's a very flexible program. And we as an industry have sort of framed it to make it very difficult for people to understand. We've tried to convince people you really should do a reverse mortgage, you need this. And instead of just giving it what it is, which is just another mortgage option.
That's correct.
It just happens to be only available for people who are 62 years of age or older. And if you decide that you want to get a traditional mortgage and make payments, that's your call. If that's better suited for you, if you want to buy a home and pay all cash, and that's the way you want to achieve no mortgage payment, that's your choice too. And then now there's a third choice, which allows you to make optional payments. And it's really set up for people who are retired or almost retired that want to have the option to make a payment or never make a payment if they don't want to.
Right.
Yeah.
Well, there's another point that we have to speak to, because you're right. I think not criticism in general, 35,000 foot criticism, and not in a negative way. Not that I don't love the program, because I do believe it helps people, because I've personally participated in those people being helped. But I think sometimes some of the things that should be dealt with more clearly are not. And because they're not, that's where the confusion lies. So I will share with you, and this was interesting also. I was selling a home. I still sell houses. Oh, by the way, seller had a reverse. And let's talk about what title records show, because California and on some states, it's very easy for me to go into a system and I can see what mortgage balances are on the record, because it's a simplified title recording or record. So I can see that sometimes, and that's what happened in this case. And I was pretty well behaved, because this guy came at me. It looks like this is a short sale. And why didn't you tell me? I said, it's not a short sale, dude.
Yeah.
Well, it sure shows. I said, no, 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 no. So clearly you don't know about reverse mortgages, do you?
Right.
And we had that chat and I explained it to him and I had to go, and this was a elderly couple that were British and moving back to the UK, and it was a delicate situation. So I'm protecting my clients who are trying to sell their home with this guy being very aggressive with me because he was not knowledgeable
Right.
about what a reverse is. So can you speak to that, please? Again, one of those, if you will, pain points I want to make sure people have a better understanding
Yeah.
about.
So is this just so I'm clear, this is another real estate agent wanting to buy the home that you have listed?
I had the listing and he brought the buyer.
Yeah.
And he pulled up the same record I can get at
Mhm.
no cost, just as a member of the
Yeah.
MLS.
Yeah.
And he had convinced himself, because we had an agreement, we had an accepted offer, but he had
Mhm.
convinced himself because of what title will look like that the house was upside down.
Right. So they're going to put a double lien on the property essentially, so that what happens is if we have a $400,000 mortgage, we'll have another $400,000 lien that's going to cover, actually 150% is going to cover more, so that it will cover that interest potential accumulation, to cover, in the event that this interest accumulates into perpetuity, that we're covered. So that meaning FHA is covered. So that's what, when you look at the title, you're like, whoa, what is this? And when your
Right.
client's going to sign a loan, they're like, whoa, what is this? So they need to be aware it's not truly the real lien position, because it's what's owed on that mortgage currently compared to what you're selling the home for, right? So in your case, your clients probably had plenty of equity in the home, but it looked as if
That's
there was
exactly
no
right.
equity.
That's exactly
Yeah,
right.
yeah,
And they
yeah.
and they were fine. But yeah, and I gently suggested he might want to do some research on how reverse mortgages work. But then it also means that you need to, as a listing agent, you need to make sure you have those records so that you can have the conversation and clarify. And then you need to get a copy of the homeowner's statement, so you
Mhm.
know what the real issues are
Yeah.
and what really is to be paid off. I had another seller who did not have a she did not she all she had was a line of credit, because she was on a fixed income, she had no mortgage on her home, but she wanted to have some safety money, if you will. And I think she had a $70,000 or $75,000 LOC that she'd only use a little. So of course, because I'm familiar, I asked her and I looked up the title and I sat down with her, a sweet lady, and I said, so I'm going to guess you have a reverse line of credit. So because I know, she said yes. And here's what she said to me, and this is why it's so important, Tane. She said, I'm on a fixed income and I wanted to make sure that if something happened, if the water heater blew up or the furnace died or something happened, I had the ability to pay for that, because I don't want to tap into my remaining savings.
Right. Yeah, 100%. Yeah, it's standby. And it's better to have it and not need it than to need it and not have it, right? It's just having that set aside line of credit, so that if something were to happen,
Right.
or maybe something that they want to do,
Right.
maybe you want to go back to the UK and visit your family, or maybe you want to go on a cruise, or whatever the case may be. That's just another bucket of income. Financial advisors look at usually a two-legged stool. You got your income and you got your assets, right? And the assets can produce more income, right? So the third leg is this idea of home equity now, which is not brought into the planning conversation at all, or looked at. The home equity is a sacred cow,
Correct.
and we
Yes.
know sacred cows make the best burgers, right? But we need to consider this as a truly a financial planning tool to use for things like that, for long-term care, for needs in the future potentially, or for just another way to enhance your retirement.
Correct.
So,
Correct.
but yeah, that's been part of the conversation around here for a long time, and I think it's picking up some traction, but certainly a long way to go for people to really be comfortable and confident with this, because reverse mortgages have such a bad rap. It got such a bad negative, you know, myself included. I had dug my heels in, you know, and it
That's
took
a
me a
pretty good
while.
story, Tane. You dug your heels in, and now you're the president of the reverse division of Fairway
Right,
Mortgage. Okay,
right,
that's a bit of a
right.
turnaround, dude.
Little bit of a turnaround. Yeah, it's quite a, yeah, quite a story for sure.
Yeah. Well, I want to
Um,
speak. I want to go back again because, again, I, as you know, I bring up things that students have said to me. And when I brought up the line of credit, a reverse line of credit, somebody else raised their hand and said, "Well, you could just do a HELOC." I said, "Yes, that's you can, but let me be very clear once again, student. If you take a HELOC and you have that money there, but you use it, you have to pay it back. You're going to have now you're going to add to your bottom line in terms of monthly outgo. And if you're
right,
on a fixed income, that doesn't make sense versus a reverse.
right,
You don't pay anything back if you're not using it.
right, right.
So, but you have a sense of security. And I, you know, I know for me that if there comes a time where I need help or I want to change my home, one of the big things that's talked about a lot in the senior real estate specialist class is aging in place. I know so many people. My father was one and my sweet 100-year-old friend that just don't want to leave their homes and they
Right.
want to stay there until they die, which is great. But let's talk about one of the other things that always comes up is the issue of, and I have some horror stories, which I know some of the more recent changes would have fixed it, but where the situation becomes one of, well, the horrors. Let me talk about the horror story first. A woman that lives here in the community where I live, her grandson convinced her, this was before the most current changes, before the financial crisis happened. Her grandson convinced grandma to take out a cash out reverse, took the money and ran.
Yep.
Grandma was now, and it broke my heart, it truly broke my heart because had someone just talked to her, she could have sold that home with nothing more to harm her. And instead, what she did was just close down the ship and the home was foreclosed. It didn't have to be.
Yeah. Oh, yeah, that's sad. That's sad. Not
So
good.
talk now about the change, speaking to that specific change, because it used to be you could get all the cash. It's
Right.
no longer that. Now there's limits on how much cash can be taken. So can you talk a little bit about that?
Yeah. Can I just go back to the line of credit really
Please do.
quickly?
Yes.
So one of
Yes.
the things I would touch on is if your students ask you that question is how many of you have had a line of credit in 2008, 2009, or
Yes.
known someone who had one with Chase or Wells or these other major banks, and they were shut down, they were
Shut
closed, they
down.
were canceled, right?
Correct.
And so the unique thing about the reverse line of credit is it never can be canceled, and that's important to understand. Is that you know, as long as they live in the home, they'll never be canceled. So, you want me to talk about the what was it again? The
The
question?
changes between the grandson who
Oh yeah, yes, 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 yes.
and what's today.
Yeah,
Like, say for instance,
yeah.
I want to do a reverse. How much cash could I get if my house is worth $750,000?
Yeah, it depends on
And
your
I'm
age.
old.
It depends on your age. So the older you are, the more money you'll get out because your life expectancy is shorter and you've got, you know, less time in need for us to have enough gap in that equity for it to the interest to accumulate. So it depends, but if you're in your 80s, early 80, 81, 82, you're going to get about 50% of that value. And that's because rates have gone up. A year or so ago would have been a different conversation. You would have got probably 65% or more. As a 62-year-old, probably going to get about 40% of
30,
that,
40, yeah.
you know, so it's but still, you know, it's money that's available to you. And if that home is free and clear, you're going to get about 60% of the proceeds today at closing and the rest of the 40% a year from now. They want to prevent things like what you just described, you know,
Yeah.
taking all the money and running. And your point is really important to understand because as your listeners are watching this and under, you know, trying to get their head around this, you know, we're dealing with a protected class. We're dealing with people who are seniors. We need to make sure. I mean, I can still remember there was a situation in California that I dealt with many, many years ago, and it was criminal activity in what they were doing to this elderly woman, and it was a coordinated effort to take her home from her. It was just like I had the police involved. I mean, it was a big deal. So we need to be just very aware. It doesn't happen all the time, but you need to have your, discernment hat on and try to find out if the kids' intentions are right on, or if they're not. And just so, yeah, it's important that we look at that for sure.
Yeah, and it's sad. And I wish, 37 years in the business, I wish I could say it's the first time I'd heard the story of a family member trying to harm or cause harm to the older family member. It just, it's just a tragic thing. And I kind of hate it. So there you go. So what else do you think are important things to know? I think we touched on the things that always come up for me in classes. Is there anything else you think we need to talk about that should be talked about in this environment so we can share it with people?
Well, yeah, I think, it's just in terms of where we at in the housing market, where are buyers, how are our millennial, first time home buyers, how are they being impacted by the increase in interest rates, the current market conditions, the affordability index, those kinds of questions, what's happening, and where do, the leading edge baby boomers and seniors come in. And, NAR just came out with an article that that boomers make up the majority of home buyers. And of course, most of those boomers have homes to sell. So that's 39% of the market. Of those people that currently own homes that are 65 and over, majority of them own their homes free and clear, a good percentage of them, but they have about $11.3 trillion roughly in home equity. So as a real estate professional and as an SRES, like you talked a little bit about that, most of the focus has been and is with SRES designations, like how do we help someone age in place, or how do we help them age out and move, sell that home and move into assisted living? So it's a noble and impactful type of situation as a real estate professional to help someone get the family involved. It's a big deal, right? It takes a long time to figure that out for someone who, what I would call is a senior that is in their mid 80s, possibly to, like you said, 104, right? A reverse mortgage can work for them, but it's not going to help you if you want to help them move out of that home into assisted living, if that's the family and their choice. But that's, from a professional side, it's helpful. And it's also one transaction. If you sell and help them move, one transaction if we focus on that sort of younger, the boomer demographic, the 62-year-old to 75-year-old ish, that kind of range, we're talking about people who are still very active. They want to live the rest of their life and do it and go out with a bang, right? And you see all these active adult communities, you see people wanting to travel and do those kinds of things while they still can. They have a house that's maybe not suited for them anymore. They've raised the kids in, they can sell that house, capture that equity, right? You have a lot of equity in yours, you capture that equity, go purchase another home. But in your options as a person that's retired or almost retired, not wanting to have a mortgage payment, the only option is to pay cash, or you put a large amount of money down and have a conventional mortgage with a small payment that you can manage based on your retirement income. But now there's this third option for people 62 and over that allows them to put a one-time down payment and oftentimes have extra cash left over from the equity that they can have outside the walls and foundation of their home. And that group of people is huge, and they don't know. I think there was like 2 million, if I'm not mistaken, 2 million transactions roughly so far, purchases done this year. Is that right? I'm not sure. But if we take 40% of that, that's 800,000.
Right.
Half those people are going to pay cash for their house.
Right.
Half of them are going to get a mortgage. So there's 800,000 people right there in the first quarter of this year that most, 99.9% of them don't know that this HECM for purchase program even exists. So that's where I feel like the opportunity to help people. It's also going to help the real estate agent, because you're going to get a listing usually and a sale. And sometimes you might even get a referral because they want to have, where I'm in Washington State, a lot of people want a place in Arizona or Palm Desert.
Yes.
Right.
That was the one thing I wanted to bring up, because that's spoken about in the senior real estate specialist class. There's some case studies in that class. And a couple of them are, you know, and my understanding, at least that's what I've been told at some point, is the case studies that are used in these programs that NAR provides are real stories. And the two stories that are in the forefront of my mind that come back every time, when I taught this class in Nebraska last year, SRES, there was a woman, a student in the class that had that exact experience. She had a family member, personal to her, had a family member who raised the family in this house. The neighborhood was changing. This woman was elderly and she didn't feel comfortable anymore in her home, in her neighborhood, and was on a very fixed income. She was a widow, blah, blah, blah.
Mhm.
She was able to take the equity in her home and buy a new home with a reverse purchase, change her life, feel more secure, and
Yep.
still have leftovers, if you will.
Mhm.
You know, when you
Yeah,
have
right,
leftovers. She had
right,
leftovers where she was able to still function. She reduced her challenges to the rest of her life, which is enormous to me.
right,
And then the
right.
other one that I'm very familiar with, because I've had it happen, somebody is not quite ready to sell their home. They're not ready to retire. And I had a transaction here in my community where that couple, Mrs. was still working, Mr. was he was on the last 2 years, she was still working. They decided to use put a reverse on the home they were living in, had the cash to buy the house they were going to retire in. And then when they sold, I mean, it was magical.
Yeah.
So
Mhm.
they sold that house that they were living in and then had a house all ready to go. It was magic. It was
Yeah.
magic, magic. And
Magic, magic. Yeah.
I love
Yeah.
magic. I'm a big fan of
Yeah.
magic because my whole thing, and it comes down, there's a woman I know here, called me one time. Her husband was ill, and it doesn't matter what the rest of the story was, but this was someone who really didn't work a whole lot in her life, and her Social Security payment was not affordable. She could not live anywhere in the state of California or many other states with
Right.
what her social was.
Yep.
And she was the formulaic example of someone who could use a reverse to be able, if she chose to stay in her home, it just, if she wanted to
Yep.
stay in the home where her husband had lived with her, blah, 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 it was
Yep.
the perfect solution for her. So,
Yeah. Yeah. I've got so many stories of that, right? Where we've had just people come to the realization that this reverse mortgage isn't what I thought it was. And this is going to be able to achieve what I wanted to achieve or we wanted to achieve, but we didn't know that we could. You know, there's an
right,
inventory problem still, right?
right,
Am I
right,
right?
right.
There's an inventory problem. And there are so many people that don't know that this program exists. They're sitting in their home and they're thinking, if only I could
Well,
sell this house to pay cash for the next house,
right,
but I
right,
can't bridge that.
right,
How do I make that work?
right. Well, the other piece to that, a sidebar to the same story, is if they don't know that they could do a reverse purchase, they're worried about, well, I don't have a mortgage or my mortgage interest rate is very, very low. If I sell this and buy something else and I need to still have a mortgage, my payment's going to be too high because interest rates are higher, blah,
Yep.
blah.
Right.
And whereas if they sold a home and bought with a reverse mortgage purchase, they don't have that problem.
They don't have that problem. They don't
Yeah,
have a problem. And if you're 65, 70 years old and your goal is to sell your house and to buy something else somewhere, another location, maybe a warmer climate, whatever the case may be, closer to family, then our interest rates a huge deal. Is the amount of money you get for your house a big deal? It is if you have to pay cash for the next house.
yes, right,
Interest rates are if you have to get a regular mortgage for
right,
the next house and make payments on that house.
right,
But it is not at all a challenge or a big deal if you understand the reverse for purchase can achieve that goal. And
right,
rates, yes, they matter because you're going to put a little more money down,
right,
but you don't have a mortgage payment.
right.
And
But so you tap me into another piece. Say for instance, remember I'm in California. So say for instance, I can sell my home for a person, not me. Person can sell their home for $700,000, and they find something they like in maybe an active adult community like we just talked about, but they're gonna walk away with a bunch of equity after the $700,000 sale. But now if they're going to do the cash purchase piece, and let's say their new home is 600,000, now they've left themselves with only $100,000 to
right,
be able to live out what happens if something happens. You know,
right,
it just doesn't make sense versus no, do a reverse mortgage purchase and you don't have a payment
right.
and you
And
have
have
you have the
250,
leftovers.
have
Yeah.
250 to 300 left over.
Correct.
Yeah.
You have the leftovers. Yeah.
Or if that active adult is near the beach or it's a more expensive area and it's now 800,000 and we sold for 7,
Right.
we can move up because we
That's
can use
correct.
the
Yes.
program to do the same.
Well, that's the thing that's interesting, that there is not, that's seller doing reverse mortgage purchase is not limited to being able to buy something of equal or lesser value like we deal with in
Right.
some other programs. Yeah, perfect.
Yep.
Well, you are awesome, my friend, and I am grateful to you for, I as I said, I
Same.
just taught this class last year, and I love that we can clear up these pain points for people and
Yeah.
clarify that they're really not painful at all. You just don't understand. Is that fair?
For sure. Absolutely. Yeah, absolutely. But thank you. It's always fun to talk about this stuff because it's so rarely understood or even
Yes.
known by people that it exists, and
Right.
real estate professionals and consumers,
Yeah.
that if we can just have open conversations and not be fearful of
Right.
those conversations, that a well-informed buyer is a better buyer, a well-informed homeowner and borrower is a better borrower. Let's just talk about it and
Mhm.
find out what this third option is.
Mhm.
You know,
There's still some concerns about people who children who they don't understand it themselves. I will share with you, if I ever have any hiccups, it's often with the counseling system, because as you know, I have dogs and one's barking and we're going to ignore him. It's the issue of the counseling session and how important a good counselor is. And we're kind of getting close to time, but I want to just one little piece, because there was one particular person I remember. It was not Fairway, it was another company, and I discussed it with her because she was very uncomfortable, and I had a lengthy conversation with her, and I found out that that particular mortgage company she was talking to do her reverse, the counselor was all about getting her to do it. It wasn't about her, and it just made if you can't tell, I'm somewhat protective of people.
we
And
should be. Yeah.
yes, and I was
Yeah.
angry.
Mm.
I found out after the fact that in that particular entity, which will remain nameless, they were more concerned. I think that the counselors were actually bonus to get the people to sign.
Wow. Yeah.
Bad. They're no
Yeah.
longer in the reverse business. Oh, by the way, this particular
Mm.
company.
Mm. Yeah. Well, HUD made some rule changes, as they always tend to do, for the better. And one of those rule changes was to not allow the mortgage company or loan officer to dictate what counseling agency that the consumer uses.
Mhm.
These are all counseling agencies that are approved, and they're provided a list of counselors to call.
Oh, brilliant.
So we can't steer. If we steer to a counseling agency, it's a big problem. We'll be in big trouble for that.
I love that change. That's a big one. And I
Mhm.
hadn't talked about that before with you. So that's a big one, because, my whole gig is always, it isn't about us. It's
Mhm.
about the consumer. It is
Mhm.
not about us. And it's not about the money. Oh, by the way, it's about the person. We must remember that real estate agents, it's not, don't count the money.
Yeah.
Care about the person.
Right.
Do the right
100%.
thing for that person, and then you can look at yourself in the mirror and say, I've been a good person today.
Yeah.
Do
Yeah.
that 24 hours at a time. Oh, by the way.
Yeah.
And then
Right.
and then you can say, did I do anything I shouldn't have done? And if I did, unwind that. So yeah. Well, honey, I appreciate you so
Yeah.
much.
Thank you.
Let's if anything else comes up, let's talk again,
Yeah.
because I love sharing the stories. I think the more stories we share, the better it will be for
Mm.
people to understand this magical thing that can happen to save somebody's ability to stay in their home and or not be afraid of not having enough money to live.
Right.
All of those
Yep.
things. So
Yep.
it's the best. Any
Yeah, for sure.
closing comments?
No, I think this has been really fun. Thank you for having me. If you or anybody has any questions, feel free to reach out. Happy to help.
And I will have your contact information at the end of our video today, so everybody can reach out to you. And if they come to me, I'll send them back to you, and that will be that. Well, thank you so much.
Yeah.
I really appreciate your time today, Tane,
Mhm.
and I'll be excited to talk to you again sometime very soon, my
Yeah,
friend.
same here. Thank you so much.
Thanks so much. Well, I hope that cleared up any questions you may have had. If it created any more questions, you're going to see Tane's contact information. You can reach out to him and get some points of clarification. You can always also reach out to me, and I'm happy to answer questions if you have them. But please understand that the reverse mortgage is, as some of my students have said, a game changer for some individuals, people that want to age in place in their homes, people that are on fixed incomes and don't have additional sources of income. They're no longer able to derive additional income so that they're literally worried about living out the rest of their days. I wanted to deal with some of the misconceptions and clarify points that some folks just don't understand. And I still do think it's a wonderful thing for those who need this type of situation. Please reach out if you have more questions. Make sure you subscribe. I've got a couple of interesting ones coming up very soon. Don't hesitate to let me know if I can answer any questions for you, and reach out to Tane Cabe if you have questions on reverses. Thanks so much for watching, and I'll see you next time.